with the Lake Houston Economic Development Partnership. And I want to thank you for participating in our COVID-19 Small Business Resources webinar. I've got Nicholas Stander with Stander and Company joining me today. He's going to talk with me about essentially what's in the CARES Act relative to small businesses. And I think everyone's really very aware of what the program benefits are. And what Nicholas and I are going to talk about today is essentially, how to apply, what to expect, and really some of the practical things that you'll need to know and some of those unintended consequences that happen as a result of the bill. So, Nick, welcome this morning. I also want to thank our sponsors. Our presenting sponsor is Minuteman Press. I want to thank Connie and Daryl for staying with us through this difficult time. Our gold sponsor is the Groves, and really appreciate their involvement here too. And then want to thank Nick as well for his participation this morning. So with that, we already did introductions in terms of who we are. And then Nick, if you would just take a quick minute to kind of talk about what you're doing, and I'll give, I think, a sense of why I've asked you here today in terms of the webinar with Stander and Company.
Thanks, Mark. Thanks so much for inviting us. So Stander and Company is an accounting firm on Old Humboldt on Main Street, and we focus on entrepreneurs and taking care of taxes, bookkeeping, consulting, and all of the sort of things that go along with that. And we've been working hard to try to get ahead of this thing and make sure that as much information about these programs is available to the public. And we're doing all we can. Clients, non-clients, anybody who wants or needs some information, feel free to give us a call and we'll help you through it as quickly as we possibly can.
Very good. Thank you. Thank you. So with that, like I said, we're going to go through the program outlines relatively quickly, but just some context for the program itself. It sounds like $350 billion is a lot of money. But when you look at some of the information coming out on where we're at with the $350 million, Bank of America had an article out yesterday. They took 212,000 applications since Friday, totaling $36 billion. So that's over 10% of the dollar amount for the loans that are going to be distributed. So, and I think President Trump was on a couple of days ago referencing that there's probably going to be a need for an additional infusion into this program in terms of a little bit more outreach and being able to retain more employees. Jobless claims are at over, I think, close to 11 million now over the last couple of weeks. And so this is unlike, I think, anything we've ever seen before. And we've, I've experienced Katrina, I've experienced Ike, I've experienced Harvey most recently. And this is by far much more of an impact than all of those combined in terms of just the closures and the uncertainty around what we're doing. At least with Harvey, we knew we had a goal towards either gates on the dam or the dredging or the detention or just infrastructure improvements. And this is something that we really have no control over. So with that said, the table of contents is up right now. So we're essentially going to talk about the CARES Act specific to businesses, and that piece of legislation was passed on March 27th. And so we'll look at the next one. So essentially SBA disaster assistance loan programs. And these are two unprecedented programs. One is an original program that's just been modified, and that's the EIDL loans. But more importantly, we're going to talk about the Paycheck Protection Program. So again, the summaries are there. And so Nick, if you could just really quickly kind of go through those, and then I may ask you a couple of questions in terms of just the program guidelines, and then we'll have a little bit of discussion about what you're seeing out in the broader public in terms of your client base.
Sure. So the Paycheck Protection Program is, you're most commonly going to hear it referred to as the PPP. Eligible employers are people who have less than 500 employees. This also would include, and this is pretty rare, but in this legislation, it includes self-employed, so sole proprietors, people who are filing Schedule Cs. That's so people who are getting 1099s, they're not necessarily getting their W-2 from someone. This is going to cover, or the way that it's calculated is last year's, most banks are looking for last year's information, last year's payroll. They're taking that for the entire year, dividing it by 12. That's what they're going to call your monthly average. payroll, they will add in benefits. So 401k items and things like that. Healthcare, they will add that in as well. And they're multiplying that number by 2.5. And so that's the amount that you would be eligible to receive.
Right. Now, Nick, with that, I mean, and that raised a question for me. So there's been a lot of discussion around total payroll costs. And initially, it seemed like the intent of the legislation was actually to improve to include federal withholdings. Has that changed since this has started now? Are businesses able to include their federal withholdings or not?
From what we're seeing, no, they're not actually including that in any of the loans. They are including Texas taxes or your local state taxes.
Okay.
So basically, what you've been paying to the TWC is being included in that amount, but nothing from the federal standpoint. So nothing on the Social Security, Medicare, any of that sort of thing, and certainly not the FIP.
Gotcha. Okay.
And I think banks are being a little conservative about it because, there's anytime there's any new legislation like this, how you execute it, that kind of gets decided as time goes on. And this is one of those situations where, unfortunately, it's just taking a little bit of time to figure out who's going to be reimbursed. And, these loans are supposed to be 100% backed by the SBA. So essentially no risk to the bank that's making the loan. However, one of the things that the SBA is notorious for is making sure that, if the paperwork is not perfect, then it may not be guaranteed. And so I think a lot of banks are a little fearful of it and they're doing their best, but, they're still going to try to play it on the conservative side.
Right, right. And that's one of the things that we talked about earlier in terms of even things like banks being very conservative because of there's no finalized promissory note, or if it is finalized, it just came out in the last 24 or 48 hours. So there's a lot of gaps, if you will, in terms of just the bank's certainty in moving forward with these potential lenders. Yeah.
Yeah, absolutely. And then, of course, this thing, because it's a developing story, I guess, these things are changing. Whether the applications that we filled out 2 weeks ago are not the same application that the SBA was asking us to use last week. And so this thing is evolving quickly. And so you need to make sure that, or everyone needs to make sure that they're getting in front of this and putting those applications in as quickly as possible.
Right. And I mean, and that's a good point. I mean, some of the banks went so far as to kind of create their own applications. And then, so there's been 2 or 3 iterations of applications. Some of them have been bank derived. Some of them have been kind of coming out of the SBA. So what I think the final application came out this last Monday. Is that correct?
Yes. Yeah. It came out around 5 or 6 o'clock, I believe, in the afternoon. And so, and then most of the banks that I've seen, what they're doing, it's in your best interest to still go out to the SBA application and fill that out. That's the information that they're essentially asking for on the bank specific forms. And so get yourself a little bit ahead of the curve. Those are the things that you're going to need. Most of it is the typical name, rank, and serial number sort of thing. You're going to need your EIN. You're going to need your business activity code that is at the top of your tax return. There's a
And then Nick, that one thing on that business activity code now, is the business activity code the same as the North American Industry Classification Code? Is that the same number, that same 6 digits?
So the guidance is not super specific about it. As you know, there's quite a few different coding systems out there, but that's what we've been using, and that's what the banks seem to be taking at the moment. So.
Okay, perfect.
And as you know, some of the codes are actually being excluded from the PPP program. So make sure that you're choosing the right one, the one that best fits what you're doing so that you maintain eligibility.
Right, and specifically what I came across and what I shared with you, and then what I've shared with some of our property management firms and real estate firms, is if you've got majority passive interest in these real estate development or property management development organizations, you're potentially excluded. So definitely talk with your CPA or your financial advisor relative to what that looks like, because there are some exclusions that are not necessarily transparent when you're looking through this process. And so Nick, so on your side, now you're helping companies prepare their PPP. So what are, you just rattled off kind of a laundry list of the things we need. So what are other elements that you're expecting from your clients in terms of getting them processed and move forward? And are you being that liaison with the banks as well?
We're absolutely, we're doing everything that we can to act as that liaison for our clients and, well, for anybody who calls and needs the help, really. But it's the biggest thing I find that people are struggling to get a hold of is their payroll information from last year.
Mm-hmm.
Obviously for us, when we do someone's payroll, we have access to it, but it's one of those things that a lot of people don't hang on to. And so, for really all 4 quarters of the 941 last year's, so that's your quarterly filing with the federal government. And really what the bank is looking for is a way to prove what the wages were because of that sort of risk, that bank risk that we were talking about earlier. They really want to make sure that they're not putting you in a position where you don't use this loan or you don't have enough employees in place or enough payroll in place to use this loan properly, because then it potentially comes back on them. And so the thing that they're really looking for is the ability to prove what last year's payroll was. And so some banks we've seen are looking for W-2s and W-3s from last year. Some banks are looking for 941s. There are a couple of banks out there that'll just take a payroll schedule. But that seems to be the thing that's holding most people up. If you don't have that relationship, that sort of monthly or quick relationship with your accounting or accountant or your payroll company, that seems to be slowing people down.
Gotcha.
But for the most part, the information is pretty straightforward. It's calculating that monthly average. There's a little bit of trickiness in that second box for the calculation. They mentioned the idle loan, and that's from what we've read, that is giving you the opportunity to refinance an older idle loan. And so for most of us, the vast majority of us, you're going to be able to just put a 0 there. And so just take your payroll and multiply it by the 2.5.
Right. Now, and one other thing too, and I mentioned this earlier, but it was specific to Bank of America, in that within that first initial 2-3 days, they took in 212,000 applications nationally, accounting for $36 billion. And whether those all get funded or not, or whether those all get approved, that's kind of another story. But I think it just kind of speaks to the magnitude of distress that's out there when one bank can essentially take in that many applications moving forward. The other thing too to think about in context is Texas alone has 2.7 million businesses. And so when we're talking about the $350 billion, there likely is going to be a need for another infusion into this. And I've heard, and we talked about the varying numbers in terms of approvals that have taken place. So I've heard everything from 70 billion to 150 billion dollars. So either one of those, and it's probably more like the 150 billion if Bank of America is at 36 billion already. So can you speak to the timeliness of this and the fact that you need to be in the bank right now kind of getting this done?
Sure. This is the fastest banks that I've seen in our area. For example, First Financial Bank has been doing a great job of processing these. And the word from them is they're expecting to fund by the end of this week. So by tomorrow, you'll see some money coming in. That's not the case for every bank. Going back to what we were talking about, the risk that the banks are taking, every bank is kind of handling this in their own fashion.
Right.
So it's important that it definitely highlights that it's important that you have a relationship with a commercial banker, because this is that time that you need them.
And you just brought up a really good point too, and that from a borrower perspective, understand number one that the relationship is going to be extremely important, but also understand too, from a patient's perspective, that each bank is kind of doing this uniquely. So you won't go to Bank A and necessarily get the same type of response or requirements that you'll get from Bank B. So can you speak to that as well?
Sure. Because of that risk that we were talking about, that's why the documents that you need for each individual bank are going to be a little bit different. And it's important when you call them up and find out if they're even taking, because that's important. That's your first step, really, is calling your bank and finding out if they're even going to do these loans. Because a
Right.
lot of banks are not doing these loans. If there's a lot of risk on it, and apparently the way that they're funded on it is not a ton of profit for them. And so some banks are turning these down. Um, and they certainly started off by taking care of their good existing clients first. And so it does put you kind of further in the back of the line if your bank isn't handling it. But that's why I was saying earlier on the document list, some people are looking for W-2s, but other people are just looking for the 941s, things like that. Some, the filing of your 2019 tax return, for example. Some banks are really wanting you to go ahead and get that 2019 filed or at least put together. But other banks are willing to take a 2018 tax return with a company provided P&L for 2019. So if you just have your profit and loss information,
Right.
so get on the phone with your bank and find out what it is they're looking for. But go ahead and make that request to your payroll company or QuickBooks or however you're doing it. Go ahead and make that request to get that payroll information.
Cool. And then another really important thing too that we've been coming across in terms of questions is what's the tax treatment? Let's say you qualify for $100,000 and that's your 2.5x for PPP. How is that loan, if it's forgiven, treated in terms of your income tax? Is that included in your gross income for the year or no in terms of what you report for this 2020?
The current guidance is no, it will not be considered taxable income. So it is truly a tax-free grant if you use it for the appropriate thing.
All right, all right. And that's one of the reasons that I think there's so much buzz around this, right? So essentially, if you essentially just maintain those employees, and if you could speak to that too, we've got some restrictions, and I'll go ahead and go back a page. Just let's real quickly talk about some of the restrictions in terms of the PPP program and what that means to the applicants as well.
So one of the big ones is double dipping. Be careful on this. If for some reason you do get into the EIDL loan program and you do get that 10,000, be careful that you don't grab more money than you're going to use in the period, because that's going to cause you to have to pay back a portion of this PPP loan. That will affect how much the SBA writes off on the PPP loan. The other item is for high paid employees. There is a $100,000 limit. So that's not $100,000 that you're able to give to an individual. It's the 2.5 month average for a $100,000 individual. So what, roughly in the $23,000 range that you have to, you have a limit on that. The federal employment taxes, do not include those in your calculation. They will not be forgiven if for some reason the bank makes a mistake and does advance you that money. It won't be forgiven. The paid sick and family leave wages, that's the portion that was discussed for the Social Security credits and how that sick pay, the forced sick pay, that will not be double dipped either. So if you're taking advantage of that paid sick or family leave wages, which was essentially the FMLA, the Family Medical Leave Act, being expanded to small businesses, those of us even under 50 employees, were required to have the 2 weeks of sick pay. And so don't include that in your wages or in your PPP either, because that's, again, could cause you to not have full forgiveness of your loan. By the way, on the forgiveness item, just as a side note, that is a sliding scale. So don't worry, it's not a, hey, if I don't spend, right now the guidance is that it's 75%. 75% of it has to be spent on wages. If you come in at 74%, that doesn't mean that the entire thing is now non-forgiven. It's a sliding scale. They will say you were off by 5%. And so now 5% of your loan has to be paid back.
Gotcha. And you brought up something that I have not heard before in calculating the wages exceeding $100,000. So it's not for employees that are at $100,000 in terms of their salary. It's in the calculation. Once it's multiplied out, it can't be more than 100,000 for that individual. Is that what I heard you say?
Well, no, they can't exceed, the pay for an individual can't exceed the $8,300 a month, which is the $100,000 divided by 12.
Okay,
So
perfect.
if you have someone who's making $200,000, they still only qualify for the 8,300.
For the 8,300.
Not that the high paid employee is fully excluded, it's that they are limited to the $100,000. So
Okay, gotcha. And again, and that's not necessarily, I was understanding it to be restrictive in terms of just for that period, but no, that's a huge plus in terms of that particular calculation. So now I'd like to, I know we've talked a lot about the PPP and we've only kind of scarcely talked about the economic injury loans, but could you go through that? Because there are a couple of things in there I think they're really attractive in terms of what they've waived on the particular program for this, because again, it exists already, but it's modified for the CARES Act and for COVID-19.
yeah, it's really a specialty 7A loan, right? And so this one here, this is the loan. So the way that I've been describing them in general is your PPP loan is the one that you go directly to the bank for. The EIDL loan, you will go directly to the SBA for that one. There is an application that's probably about 5 pages or so that's out on the internet. That's the one that also qualifies you or puts you in the running for, I should say, the $10,000 of emergency funding. This is not a forgivable loan, though. This is going to be a long-term loan. Long-term has not been defined. Fixed rate. So the interest rate right now, we're being told, is 3.75. There's been some pushback on that because of the lowering of interest rates by the Fed. And so 3.75 is, almost a 3.75% return for the bank. And so they're talking about lowering that, but there's no specific guidance on that. And, interestingly, on this form, what you're doing is you're going in and you're reporting the last 12 months of revenue. And that's really supposed to be, from what the form says, it's supposed to be from February 1st of 2019 through January 31st of 2020. That's the date of declaration of the disaster was January 31st. And so you kind of have an odd period there. If you can't get that information, though, it is much more important that you just go ahead and put in the last 12 months, put in your revenue from last year. The second blank on that one is getting in that last 12 months of cost of goods sold. On the form, you'll notice there's some red asterisks next to things as you're filling them out. Those are the required ones. And so if you see some funny things in there that just don't quite make sense, it's probably because you can skip it, because there are things in there for nonprofits as well. And so if it's asking you about your costs on your nonprofit programs for the last 12 months, probably doesn't apply to you unless you're a nonprofit. So go ahead and just skip those questions. This one here, that form again is pretty straightforward. It will go through those. Besides those 2 questions, you will need to know your 12 months. You will need to know the 12 month, you'll need to know the 12 months of revenue and the 12 months of cost of goods sold. And then you do, for any owner over 20%, you'll need a home address, date of birth, and social security number for them.
Okay.
But the requirements are generally the same. You're less than 500 employees. This one here, though, you don't ask for an amount. And so it's our understanding at the moment is that you'll be contacted by the SBA, and somewhere through that process, they will decide how much you qualify for and how long they think it's going to take you to pay that loan back. From dealing with the SBA in the past, it's generally a very reasonable process. And so it's in a way, I guess, a negotiation. Be prepared to go in and, have an idea of how much you think you're going to need, and then, and how long you think it's going to take you to pay that back. And so some of the guidance suggests that it could be up to 30 years.
Wow. And then we've had a couple of questions come in terms of, and these are specifically to you because you're much more of an expert than I am. And one disclaimer that I did not give in the beginning, and Nick, I'll let you give our disclaimer since that's going to be more prudent from you than from me.
Oh, yes, absolutely. We are giving general information here. I don't know your specific tax situation, and so we will do our best to give you the best information that we possibly can, but you really do need to make an appointment with someone and have them review everything with you so that you're getting things or advice that works for you.
Cool. So the first question that we've got is, if you've already applied, when can we expect to hear if we qualified, and when will we receive the fund? And my bank seems to be clueless, and I know the volume is high. So can you give a prognostication in terms of if they've been approved, when do they think the monies might be available?
So the legislation suggests that it's supposed to be 3 days. I would not hold my breath for that. That's going to take a little bit longer than that. But you should, I'm assuming, or we're probably talking about the PPP loan here.
Right.
If you're talking about the PPP loan, there should be a banker, that relationship that we were talking about before is just so important. Make sure that you call the bank, call your personal banker and find out what they're doing, because every bank, like we said earlier, is absolutely different. On the EIDL loan, that is absolutely kind of just going into a black hole. That is, you get a confirmation number, and eventually there will be a website where you can type that confirmation number in and get a status on your loan.
Mm-hmm.
But just nationwide, I've not heard of anyone being funded on the 10,000 yet, and I've not heard of anyone having feedback yet. So, so SBA, who I have no idea on that one. PPP loan, get in touch with your banker.
Yeah, cool. And then one thing too on the EIDL loan, and we talked about is, and again, if you make application and you get through the process, essentially what the statute says is there's a $10 million emergency advance. And even if you don't move forward with a full application or you're denied, you get to keep that $10,000. Is that a correct statement, or up to $10,000?
Up to $10,000, yes. And so
Yep.
even if you don't make it through the rest, it's just considered a grant. Yeah.
Gotcha. Another question, or at least another comment or question that I was posed yesterday is really regarding the ethical nature of applying. And so some businesses have somewhat of a nest egg put away, and they've essentially said, well, I think I can make it a month, or and so I've recommended to all businesses that if you're eligible, you should apply. We don't necessarily, we're under a stay-at-home order right now until the end of April. We're not quite sure if we're going to have an extension of the shelter in place. What advice would you give to companies that do have, quote unquote, a nest egg out there in terms of the application process?
We are recommending that you apply because, yeah, right now you think, or we all think we can see the end of this thing possibly in a month. But what if it goes 2 months? What if it goes another 3 months? And so trying to make sure that you're taking advantage of these funds. I mean, that's what these funds are for. The cost of shutdown is, there was an economist that was on the TV last weekend who was talking about this, and the estimated cost of this at the moment is between $2 and $2.5 trillion. And that is the same amount of money that's been made available. And so you are going to suffer a loss at some point. Most of us, I should say, are going to suffer a loss at some point. And, we are busy right now, for example, but as clients continue to struggle in their ability to pay in 3 months, 6 months, that sort of thing, certainly remember it from Harvey. I'm sure you do too, Mark.
Right.
It wasn't necessarily right away that a lot of businesses saw the losses. It was 18 months later when
right.
their clients just couldn't keep the doors open anymore, and those emergency funds saved a lot of businesses. So get in line. It's okay. This is what you pay your taxes for.
All right, cool. Well, thank you for that. And then another question coming in, can you apply for both the PPP and the EIDL loan?
Yes, absolutely. And we recommend that you do. Be a little bit careful on it. You don't want to double dip. That's the thing that the SBA is going to be looking at when they do forgiveness of the PPP loan, is that if you had the emergency $10,000 that was given to you, it will just show up in your bank account, but that $10,000 shows up, and then you took $150,000 for the PPP loan, and your total payroll was the $150,000. Well, that's what the 10 was for as well. And so expect 10,000 of your PPP to not be forgiven. So
Gotcha.
the SBA is absolutely going to be looking for that sort of, I'll call it double dipping.
And then we've got a couple of things too in terms of availability, both with your company and with on the chamber site. The presentation that you all see now is a very condensed version. We're going to make available a much longer version on our website. And then Nick, you've got with Standard, you've got a pretty robust presentation as well. Is that just for your internal clients, or can folks go and download that on your website?
Folks can go out and download that on our website. It's open to anybody. And like I said, if you have questions, then client or not, just give us a call and we'll do everything we can to help out with that. And we've also posted it on our YouTube channel. So
okay, perfect. So with that, I think we've gone into fairly granular amount of detail on both the EIDL and the PPP. And let's pivot now and really talk about the payroll program. And this is kind of a modified program too, and it's a little bit unique in terms of how this is offered up. And so the employee retention credit, can you give us a go at that? I mean, it's different than WOTC in that, WOTC is kind of a tax credit to offset your liability, but this is a little bit different beast.
This is slightly different, yeah, and this is getting up to that the 50% of the wages that you've paid out, getting the Social Security credit over the next few years. This one, so there's probably the least amount of guidance out there from what I've seen on this loan. This is fewer than 100 full-time employees as well, but it's the same. The thing to be careful about, this is definitely a double dipping issue on this one, Mark, is be super careful on the amount that you get for the EIDL and the amount that you get for the PPP, because it will exclude you from being able to use this program. This one in particular is probably not the best fit for most small businesses. And the reason that I say that is because it's essentially a Social Security credit, Social Security tax credit that you're paying, that you'll get over your 941s for the next couple of years. And so while it will be beneficial, but it's going to be a very slow payback of the money that you've forwarded or you've advanced to your employees.
Right. Perfect. And then I had another question come in regarding the PPP and the rehiring requirements. So can you speak to, and I'll back up a couple of slides. Can you speak to that window in terms of when, if you've laid employees off, what's that window to kind of get them back on board so you can be eligible for the forgiveness part of the loan?
What you want to do is if you get that PPP loan, make sure that you're hiring back the employees and you're using this for wages. You'll have up to June 1st, or that's the current date. I do expect some of that to change, by the way, Mark, because they are talking about, I think they're actually debating it on the Hill today for some additional funding for this program. And so I think that's going to cause a little bit of a time shift. So we'll have a little more time to be able to do some of these things. But June 1st is my current understanding of it. And so you need to get back to paying those people, because the idea behind the PPP loan is that you're not laying people off. And so it's okay for you to drop a couple of people, but there is a formula for that that's out on the internet, and I can share that with y'all. I can put that in
Now with that calculation too, and I've seen, and there are calculators that are being designed and developed both internally with the banks and even online. So is that something that folks can grab from your website as well, as far as the calculator in terms of determining benefit?
Yes. Yeah. Well, I'll post that out there. I'll put it on my Facebook, and I'll post a link to it on under this event for the chamber's website as well.
Okay, perfect. Now, and if we've got a couple of more, I'm kind of getting fed questions via text or whatever, and I'll kind of hang out for just a couple of minutes and see if there's anything else specific to the PPP program, the idle or the employee retention credit. So, and I'll kind of ask you an open-ended question in terms of, kind of what you're seeing in the marketplace. Again, we've talked about coordination. We've talked about the determination that federal taxes are not part of the calculation. For you, what's the big thing in terms of the institution? So from what I understand, the CARES Act essentially allowed a whole lot more folks to participate in providing this particular program or the PPP. So what are you seeing in addition to the banks that already do the SBA 7A loans? Who else is eligible from a lending institution perspective to reach out and make these loans?
The SBA still has to approve lenders for this. And so you still have to become an SBA approved lender. But I think, so what's happening is they're kind of streamlining that process. And they were supposed to have another 1,000 banks on by the middle of this month. And so just because your bank isn't currently an SBA approved lender doesn't mean that they won't be very soon. We've also seen some banks are outsourcing this too, Mark. And so they're taking your application and they're actually sending it over to some of the other national lenders. And so don't be surprised if you file your PPP with, specifically, I've seen it with credit unions that are not SBA lenders. Credit unions tend to be more focused, not all, certainly not all, but credit unions tend to be more focused on personal financing, personal banking. And so a lot of those banks, those credit unions, those guys that are focused on personal credit or personal banking rather, seem to be outsourcing it. And so apply, even if your bank is not in that line, or excuse me, isn't on the list, go ahead and get your stuff together and send it to a bank that is.
Okay, perfect. And I've seen both the 7A approved banks. I've seen, I think they en masse did FDIC lenders and kind of did them as a block. And then I have noted some credit unions kind of coming out and offering this service up as well. And looks like I've got another question here. Is it okay to apply for PPP at multiple banks as long as we only go with one and withdraw others when PPP closes at that bank? So essentially, can you go to, Chase and Wells Fargo and First Advantage and fill out an application and then see who responds first, or what's your thought on that?
Good question. That one, I've not gotten that one yet. I don't know of anything off the top of my head that says that it is wrong. Just certainly be careful about it. Make sure that you don't get advanced twice, because you could certainly get yourself into a problem. But I will go look back. I'll write that question down and I'll go back and look at the PPP loan application to see if it says you can only apply one time. But I don't know of any specific exclusion for that off the top of my head that I've seen.
Okay. And I would say too, with that, and we didn't talk about the special inclusion for the larger entities in terms of if they're franchisors or hotels, they can actually, as long as there's not more than 500 people at a specific location, that they're actually eligible to go ahead and apply. And that's under the, is that the EIDL or is that both?
It's actually both. So there is an exclusion for that, for more than 500 employees for that. And there's an exclusion if you have restaurants with multiple locations or hotels with multiple locations. And so you still can qualify. There are, yes, absolutely, there are exceptions for the 500 employees rule.
Excellent, excellent. And Nick, I'm going to ask you to stick around with us. I know we're going to pivot to kind of the other alternative resources that are out there, and what businesses should be looking for. And so, first and foremost, there's kind of a laundry list of what's out there. And I'd say too, to all the businesses that are out there, these essentially the prioritization is the PPP. And I think that's where you want to make sure you get in line and apply. And that's what we've been telling people as well. The EIDL loan, we've been telling people to apply for that. But Nick, you brought up just, there's the off chance that, you have to make sure that those dollars are not being used for the same thing. So if you do get a significant PPP loan, then the dollars within the EIDL have to be used for a completely separate purpose in terms of the qualification and eligibility. So with those, we're saying get in line, apply. The EIDL loan is online. You can do that yourself. To your point, it's a 5-page application. We're still not 100% clear on whether that $10,000 is automatic or whether that's up to $10,000 and $1,000 per employee that you have. And so we're still, we've gotten some conflicting information on that in terms of, how that's proposed and how that's going to be distributed. But I've not heard of anyone yet that has actually received any monies back on the EIDL side. And some companies have applied back in, end of March. And you mentioned the black hole. So the SBA is not necessarily known for its expedient. So just be patient, especially on the EIDL side. You'll probably get a much quicker response on the PPP program. But with that said, the alternative business resources that are out there, and Lift Fund is a significant partner of both the Lake Houston EDP and the Chamber of Commerce. We're in partnership with them right now. But they made several $100,000 worth of loans for all small businesses in the Lake Houston area post Harvey. And that was in the form of 0 interest loans. That was in the form of reduced interest loans with a 4 or 5 year term, and was extremely beneficial to us getting through Harvey. The SBA has other existing programs that are out there that are disaster related. There's a $35,000 bridge loan program that's out there. There's the existing EIDL loan, but we've talked about that being modified in the CARES Act for COVID-19. If you need guidance or counseling, the SBDC is out there. We've got new people out here in the Lake Houston area. SCORE in terms of business counseling and moving forward with advice. And I put lending institutions, including the banks and credit unions. I mean, that's one of probably the first places you should go relative to the CARES Act to kind of get the information that you need moving forward. And then last but absolutely not least is the chambers of commerce and your local economic development corporations. And, we talk about first responders and, emergency situations in healthcare, whereas the chambers and the LEDO serve as the first responders to our businesses. And so, it's unfortunate that the chambers and some of the economic development corporations have been left out of the mix in terms of both the PPP program and potentially the EIDL program as well. It looks like we're going to be excluded from collecting any type of loans on the EIDL side too, which is really unfortunate. There's some other, rationales behind why C6s were excluded. Believe it or not, some of Major League Sports are involved and other associations that are kind of politically motivated. And so with that said, all of the C6s were removed from eligibility, which was probably not the best thing to do because essentially you've kind of handcuffed the chambers and some of the economic development corporations in terms of being able to give business. But this is just some of the resources that are available. And then with that, I'll just specifically talk about what we're seeing with Lift Fund. Again, they're resurrecting their disaster loan program. They're talking to foundations right now. And again, we had, I think, over a dozen loans made out in the Lake Houston area via the low interest or no interest program. And it looks like they're going to do the same thing. And I apologize, I'm having to kind of look over at the screen right now. But this is a little bit of an enhanced program right now. These loans are up to $50,000. They've got 120-day deferment on the first payment. Qualifications, you must have been in operation August 1st of 2019. You've seen a decrease in revenues of at least 15%. Business owners are able to have a consultation reviewing a 6-month recovery plan. And I think that's a significant value add to Lift Fund. They're a little bit of a different lender. Even the loans that they denied, they personally have people go through them and figure out, essentially from a credit counseling perspective, how to help those businesses get lined up and queued up to be able to come back and secure a loan. Must be able to properly cover expenses with the new loan payment, and then they must be in good standing with their creditors for the past 6 months. So again, that's just an additional resources out there. I will speak to Harris County. I believe on Tuesday passed a resolution to create a $10 million funding vehicle for small businesses. And again, unfortunately, nonprofits are not included in that, but that is in the works right now. They're building the infrastructure for it. They're building the applications and all that good stuff. And so there are resources out there for you. And so if you have questions, please feel free to reach out to the EDP and to the chamber. We have lots of information posted on our COVID-19 or coronavirus website, and we're updating that daily. We're stealing lots of information and putting it on there because it's just the right thing to do in terms of availability, in terms of helping our clients. So with that, Nick, I appreciate the information and you taking some time out to share. We know you've got a lot of things going on. I know April 15th is no longer an issue right now, but I just wanted to thank you for being here. And we did have one question on the family leave, and if what I will say is download Nick's presentation, and then once ours is uploaded, we'll actually have a link on there too. There's a lot more specific information on the family leave and expecting the $1,200 checks and all that warm and fuzzy stuff. So we didn't ignore that, but we wanted to kind of focus on the businesses first, because within the second piece of legislation, that's kind of moving forward. And this was really focused on our business community and helping them out. So with that said, I want to thank our presenting sponsor, which was Minuteman Press. So thank you to Connie and Daryl. Our gold sponsor was the Groves and building new homes. And I know they're maybe struggling a little bit right now too with the shelter in place. And then Nick, want to thank you again and thank our audience for participating. Hopefully this was valuable to you, and please be safe, shelter in place, and then wash your hands at least 100 times a day. So thank you very much. Bye.
I do have that answer for you, Mark. If you
Oh, you do? Well, then
yeah,
we'll go ahead and jump to that. Go ahead, Nick.
I apologize, but I did find it. It is okay for you to apply at multiple banks. What you need to do, though, is make sure that you talk to the bank and ask them to tell you before they submit your application to the SBA. If you submit multiple applications by accident or on purpose, you will be accused of fraud. And so you will have to defend yourself if you put yourself in that situation. So probably best if you're working with a bank that you know, but it is an acceptable strategy to send it to multiple banks.
Awesome. Thank you. Thank you very much. And thank you all for joining us, and be safe.
Thanks, Mark.
All right. Thank you.